The United States government owes $37 trillion. That is more debt than any nation in human history. More debt than the entire global economy produced in a single year just 2 decades ago. And here's what nobody is telling you. They are not planning to pay it back. They are planning to erase it. Not through default, not through austerity, not through higher taxes, but through devaluation. Strategic, calculated, invisible theft of purchasing power from everyone holding dollars. And the mechanism they are using is something most people think is separate from government: crypto and gold. You are watching the US government execute the most sophisticated debt elimination strategy ever attempted. They are building a parallel financial system, accumulating strategic reserves in Bitcoin and gold, preparing to revalue those assets at multiples of current prices, and using that revaluation to technically balance a debt that is mathematically unpayable. But here's the part that should terrify you. When they revalue gold and crypto upward, they are simultaneously devaluing the dollar downward. Every dollar you hold loses purchasing power. Every bond you own becomes worthless. Every savings account evaporates in real terms. You are about to be robbed legally, quietly, completely, and most people will not realize it happened until it is too late. In this video, I am going to show you exactly how this works. Not theory, not speculation. The actual mechanics of debt devaluation through strategic reserve revaluation. I will show you the historical precedent. This has happened before multiple times. I will show you what the US government is doing right now: the executive orders, the Bitcoin reserves, the gold accumulation. And I will show you the timeline for when this happens, how fast it happens, and what you must do before it's too late. Because this is not coming in 20 years. It is happening right now. The pieces are moving into place, and once it executes, there is no going back. Let me start with something most people do not understand. Government debt is not like household debt. When you owe money, you have to pay it back with real value. Work more hours, sell assets, cut spending. But governments have a tool you do not have. They control the currency. And controlling the currency means they can change the rules. They can redefine what a dollar is worth. They can revalue the assets on their balance sheet. They can make debt disappear without ever paying it. This is called a monetary reset, and it has happened repeatedly throughout history. Let me show you the pattern. In 1933, the United States was drowning in debt from World War I and the Great Depression. The debt-to-GDP ratio was 40% and climbing. The economy was collapsing. Deflation was destroying everything. So President Franklin Roosevelt did something radical. He revalued gold. Not by a little bit, by 69% overnight. Here is how it worked. In 1933, gold was officially priced at $20.67 per ounce. That had been the price since 1879. For 54 years, 1 ounce of gold equaled $20.67. The dollar was defined as 1/20th of an ounce of gold. This was the gold standard. Your dollar was literally a claim on physical gold, but the government was broke. They could not pay their debts at the current gold price, so Roosevelt issued Executive Order 6102. He made it illegal for Americans to own gold. You had to turn in your gold to the government. They paid you $20.67 per ounce, the official price. Most Americans complied. They traded their gold for dollars. Then, after the gold was collected, Roosevelt revalued it. In 1934, he announced the new official gold price, $35 per ounce, a 69% increase overnight. Here is what that did. The U.S. government owned most of the nation's gold. They had just confiscated it. At the old price of $20.67, their gold reserves were worth about $4 billion. At the new price of $35, those same reserves were suddenly worth $6.8 billion. They created $2.8 billion in value out of thin air just by changing the price. But here is the key. The debt they owed was denominated in dollars. Those dollars were now worth less relative to gold. Before the revaluation, the government's debt was 40% of GDP. After the revaluation and the inflation it caused, the real debt burden fell to 25% of GDP within 5 years. They erased 15 percentage points of debt to GDP just by revaluing gold and devaluing the dollar. And American citizens holding dollars lost 40% of their purchasing power, not immediately, but through the inflation that followed over the next decade. The government transferred wealth from dollar holders to debt elimination. The people who had turned in their gold at $20.67 watched it get revalued to $35, but they could not buy it back. It was illegal. They were stuck holding devalued dollars while the government erased debt using their confiscated gold. This is not ancient history. This is the playbook, and it is happening again right now. The United States currently owes $37 trillion in debt. The debt-to-GDP ratio is 132%, higher than any time in American history except World War II. The annual interest payment on that debt is $1.2 trillion, more than the defense budget, more than Medicare, more than anything except Social Security. And interest rates are still elevated. If rates stay at 5%, the interest payments will hit $1.8 trillion annually by 2027. That is 6% of GDP, just interest, not principal. This is unsustainable. Everyone knows it. The Congressional Budget Office knows it. The Treasury knows it. The Federal Reserve knows it. They have run the numbers. There is no scenario where this debt gets paid back through traditional means. You cannot tax your way out of 132% debt to GDP. You cannot grow your way out when the debt is growing faster than the economy. You cannot cut spending enough when interest alone consumes 6% of GDP. There is only one option: devaluation. But here's the problem. If they simply print money to pay the debt, everyone sees it. Inflation spikes. The dollar crashes. Confidence collapses. They need a more sophisticated method, something that looks legitimate, something that looks like smart policy, something that does not look like theft. Enter Bitcoin and gold. On January 23, 2025, President Trump signed an executive order establishing a strategic Bitcoin reserve. The order directs the Treasury to acquire and hold Bitcoin as a strategic asset, similar to the Strategic Petroleum Reserve, but for digital currency. The stated goal is to position America as a leader in digital assets, to ensure the U.S. does not fall behind China or other nations, and to protect American innovation. That is the public narrative. Here is the real reason. The U.S. government currently holds approximately 210,000 Bitcoin seized from criminal enterprises. Silk Road, Bitfinex, various ransomware cases. At current prices, around $100,000 per Bitcoin, that is $21 billion. Not nothing, but not enough to matter for a $37 trillion debt problem. But the executive order does not just direct them to hold existing Bitcoin. It directs them to acquire more. The proposed target in the bill introduced by Senator Cynthia Lummis is 1 million Bitcoin over 5 years. At current prices, that would cost $100 billion. But here is what they are actually doing. They are not buying Bitcoin at market prices. That would spike the price and cost too much. They are acquiring it through other means, seizing it from ongoing criminal investigations, accepting it as payment for fines and penalties from crypto companies, and potentially even mining it using government-owned energy infrastructure. And they are doing it quietly, because the goal is not to acquire Bitcoin at current prices. The goal is to acquire Bitcoin before they revalue it. Now, let me show you the math behind the revaluation. Right now, Bitcoin is priced around $100,000. Let's say the US acquires 1 million Bitcoin over the next 3 years, at an average cost of $120,000 per coin. That is $120 billion in total acquisition cost. Now let's say they acquire it quietly. No major announcements, no massive market buys, just slow accumulation through seizures, fines, and intermediaries. By 2028, they hold 1 million Bitcoin. The market does not know how much they have. Then they make the announcement. The U.S. Strategic Bitcoin Reserve is operational. We hold 1 million Bitcoin, and we are revaluing it, not at current market prices, but at strategic reserve prices, just like they did with gold in 1934. They announced that, for purposes of the U.S. balance sheet, Bitcoin will be valued at $1 million per coin, not the current market price of $100,000, but $1 million, a 10 times revaluation overnight. What does this do? Their 1 million Bitcoin, acquired for $120 billion, is now worth $1 trillion on the government balance sheet. They have created $880 billion in value out of thin air just by changing the accounting price. And because the government is the largest holder, the market follows. Bitcoin does not go to $1 million instantly, but it surges. $300,000, $500,000, $800,000, close enough. And as Bitcoin rises, the dollar falls, because revaluing Bitcoin upward is the same event as devaluing the dollar downward. Now let me show you the gold side, because Bitcoin alone is not enough. The U.S. needs a two-pronged strategy: Bitcoin for the future, gold for stability. The U.S. government officially holds 8,133 tons of gold. That is about 261 million ounces. At current prices around $2,800 per ounce, that is worth $731 billion. Not bad, but still not enough to make a dent in $37 trillion of debt. But here is the thing, that gold is valued on the government's books at $4,222 per ounce, not $2,800, not $2,800, not current market prices, $40,220. That's the official statutory price set in 1973. On the books, the U.S. gold reserve is worth $11 billion, not $731.1 billion, $11 billion. This is insane. They're holding an asset worth $731 billion and valuing it at $11 billion. Why? Because it gives them room to revalue. Let me show you what happens when they do. The U.S. announces a new gold revaluation, not to market prices, higher. They declare that, for purposes of the U.S. strategic reserves and debt backing, gold will be valued at $20,000 per ounce, not the current $2,800, $20,000. Why $20,000? Because that's the number that makes the math work. At $20,000 per ounce, the U.S. gold reserves are worth $5.2 trillion, up from $11 billion on the books. They've just created $5.2 trillion in balance sheet value out of thin air, just by revaluing an asset they already own. Now combine it with Bitcoin. 1 million Bitcoin at $1 million each equals 1 trillion. 261 million ounces of gold at $20,000 per ounce equals $5.2 trillion. Total new balance sheet value from revaluation is $6.2 trillion. That's $6.2 trillion in assets that can technically offset debt. Not pay it off, but offset it on the balance sheet, making the debt to GDP ratio look better, making the balance sheet look stronger, making the government look solvent. But here's the real magic. Once gold is officially revalued to $20,000 per ounce, what happens to the market price? It follows. If the largest gold holder in the world says gold is worth $20,000 and backs that with policy, the market reprices. Gold doesn't hit $20,000 overnight, but it goes to $5,000, then $8,000, then $12,000 over the next few years. And as gold rises to $20,000 and Bitcoin rises to 1 million, what's happening to the dollar? It's getting destroyed. Because if gold, which was $2,800, is now $20,000, The dollar lost 85% of its value relative to gold. If Bitcoin, which was $100,000, is now $1 million, the dollar lost 90% of its value relative to Bitcoin. The average American doesn't think in terms of gold or Bitcoin. They think in terms of groceries and rent. But those prices are about to explode. Because when the dollar loses 85 to 90% of its value relative to hard assets, it loses 50 to 70% of its value relative to everything else: food, energy, housing, everything. Let me show you what this looks like in real terms. You have $100,000 in savings today. You think you're doing okay? Not rich, but stable. The government revalues gold to $20,000 and Bitcoin to $1 million. Over the next 3 years, inflation hits 20% annually. Not official CPI, real inflation. Food prices double, gas prices double, rent increases 60%. Your $100,000 in savings now buys what $35,000 bought 3 years ago. You lost 65% of your purchasing power. But the government's debt? It's still $37 trillion nominally. But in real terms, adjusted for the inflation they caused, it's worth $13 trillion. They erased $24 trillion in debt burden, not by paying it, but by devaluing the currency it's denominated in. They stole $24 trillion from creditors, savers, and dollar holders and gave it to themselves in the form of reduced debt burden. This is the strategy, and it's already in motion. Let me show you the evidence. In December 2024, Senator Cynthia Lummis introduced the Bitcoin Act. The bill proposes the U.S. acquire 1 million Bitcoin over 5 years, hold it for at least 20 years, and use it as a strategic reserve asset. The bill has bipartisan support. Both Republicans and Democrats are signing on. Why? Because both parties know the debt is unpayable. Both parties know devaluation is the only option. Both parties would rather steal from savers than cut spending or raise taxes. This bill is the framework for Bitcoin revaluation. It's not about crypto adoption. It's about debt elimination through asset revaluation. In January 2025, President Trump signed the executive order establishing the Strategic Bitcoin Reserve. The order gives the Treasury authority to acquire and hold Bitcoin. It directs federal agencies to develop policies supporting digital assets. It positions Bitcoin as a matter of national security. This is the execution. The bill was the proposal. The executive order is the action. They're not waiting for Congress. They're moving now. And on the gold side, there's been increasing talk about returning to a gold-backed currency. Not a full gold standard, but a partial backing where the dollar is backed by a percentage of gold reserves. This sounds conservative, sounds like sound money. But here's what it really is. It's the setup for revaluation. You can't back the dollar with gold at $2,800 per ounce. There's not enough gold. The M2 money supply is $21 trillion. The U.S. holds $731 billion in gold at current prices. That's 3.5% backing. You can't credibly say the dollar is backed by gold when it's only 3.5% backed. But if you revalue gold to $20,000 per ounce, suddenly you have $5.2 trillion in gold. That's 25% backing of M2. Now, you can credibly say the dollar is backed by gold. You can market it as a return to sound money. You can sell it to conservatives who want hard money backing. But what you've really done is revalue gold 7x and destroyed the dollar's purchasing power by 85%. It's theft marketed as fiscal responsibility. Now, let me show you the international dimension, because this isn't just domestic. The U.S. needs other countries to go along with this, and they're setting that up too. The BRICS nations, Brazil, Russia, India, China, South Africa, have been talking about a gold-backed currency for years. They're tired of dollar dominance. They're tired of the U.S. printing money and exporting inflation to them. They want an alternative, and they've been accumulating gold. Thousands of tons. China officially holds 2,300 tons. Unofficially, analysts estimate 4,000 to 6,000 tons. Russia holds 2,300 tons officially. India holds 840 tons and is buying more. These nations are preparing for a monetary reset. They're accumulating the hard assets that will matter when fiat currencies collapse. And here's the key. When the U.S. revalues gold at $20,000 per ounce, it's not just a U.S. policy. It becomes a global repricing because gold is a global market. If the U.S. says gold is $20,000 and China says gold is $18,000 and Russia says gold is $22,000, the global price settles somewhere in that range. Everyone's gold reserves get revalued. Everyone's debt gets devalued. It's a coordinated reset, not explicitly coordinated, but implicitly aligned. Because every government has the same problem, unpayable debt, and the same solution, devaluation through hard asset revaluation. The U.S. is positioning this to happen in 2026 or 2027. 2025, accumulation phase. The U.S. quietly acquires Bitcoin through seizures and strategic purchases. They don't announce totals. They don't market buy. They accumulate in the shadows. Gold reserves remain constant, but they start talking about gold backing, sound money, and strategic reserves. They're setting the narrative. 2026, crisis phase. The debt ceiling fight becomes severe. The U.S. government faces potential default or shutdown. The bond market starts showing stress. Yields spike. Confidence wavers. The crisis creates the justification for extraordinary measures. In times of crisis, the government can do things that would be politically impossible in normal times. The crisis is the excuse. 2027, revaluation phase. The government announces the strategic Bitcoin reserve is operational. We hold 1 million Bitcoin. We're valuing it at $1 million per coin for balance sheet purposes. Simultaneously, they announce a return to gold backing. The dollar will be partially backed by gold. Gold is revalued to $20,000 per ounce for reserve purposes. This is sold as stabilizing the currency, restoring confidence, and ensuring American financial leadership. The public buys it because it sounds strong, responsible, and like the opposite of money printing. But what's really happening? Bitcoin goes from $100,000 to $1 million over 12 to 18 months. Gold goes from $2,800 to $20,000 over the same period. The dollar loses 70% of its purchasing power. Inflation explodes, not to 10% annually, but 30%, maybe 50% in the first year. Food prices triple. Energy prices quadruple. Housing prices double in nominal terms, but fall in real terms because nobody can afford them. The economy enters stagflation, high inflation, low growth. Unemployment rises to 8–10%. The middle class is destroyed, but the debt is erased. $37 trillion in nominal terms, but worth $12 trillion in real terms. Mission accomplished. The government survives. Creditors are destroyed. Savers are wiped out. And it's all legal, all policy, all justified as necessary to preserve American financial strength. Now, let me show you who wins and who loses. The winners are obvious. The U.S. government. They raised $25 trillion in real debt burden without defaulting. Politicians avoid the political pain of spending cuts or tax increases. The Federal Reserve maintains control of the monetary system. Early Bitcoin holders, if you bought Bitcoin at $30,000 and it goes to $1 million, you win massively. Early gold holders, if you bought gold at $800 and it goes to $20,000, you win, but you have to hold through the volatility. Foreign governments with gold reserves, China, Russia, India, their gold gets revalued too. They erase their debts using the same mechanism. The wealthy, people with assets, real estate, stocks, businesses, those assets inflate in nominal terms. They preserve wealth through the transition. Now the losers, the middle class, people with savings and dollars, retirees on fixed incomes, their purchasing power evaporates. Bondholders, anyone holding U.S. treasuries, you're repaid in devalued dollars. You lose 70% in real terms. Pension funds holding massive amounts of government bonds. Those bonds become worthless in real terms. Pensions collapse. Workers, wages don't keep up with inflation. Real wages fall 40 to 50%. Living standards collapse. Renters, landlords raise rents to match inflation, but wages don't keep up. People get priced out. Homelessness spikes. Small businesses, they can't raise prices fast enough to cover costs. Margins collapse. Failures spike. The American dream dies because the currency that denominated that dream is destroyed. This is not hyperbole. This is the mathematical outcome of the strategy. Let me show you the historical parallels. This has happened before multiple times. Weimar Germany in the 1920s. The government couldn't pay war reparations, so they printed money. The mark collapsed. Hyperinflation destroyed the middle class, but the government's debt was erased. Argentina, multiple times. 1980s, 1990s, 2000s. The government couldn't pay debt, so they devalued the peso. Savings evaporated, but debt disappeared. Zimbabwe 2000s. The government printed money to cover deficits. The Zimbabwe dollar became worthless. Wheelbarrows of cash to buy bread. But government debt gone. Venezuela 2010s. The government printed believers. Hyperinflation destroyed the economy, but debt burden eliminated. The pattern is universal. Government gets over-indebted. Government devalues currency. Savers and creditors lose everything. Government survives. And the U.S. is following the exact same script, just with more sophisticated branding. They're not calling it money printing, they're calling it strategic reserve revaluation. They're not calling it currency debasement, they're calling it gold-backed dollar restoration. They're not calling it theft, they're calling it necessary policy to preserve American financial stability. But the outcome is identical. You lose, they win. Now, here's what you need to do. And you need to do it now, not later. Once the revaluation happens, it's too late. First, get out of dollar-denominated assets. Bonds are death. Government bonds, corporate bonds. Any bond denominated in dollars will lose 70% of their value in real terms. Sell them now. Cash is death. Holding dollars in savings accounts, checking accounts, money markets, it's all getting destroyed. Minimize cash holdings. Keep only what you need for 3 months of expenses. No more. Second, get into hard assets. Gold, physical gold. Not gold ETFs, not gold mining stocks. Physical gold that you hold. Coins, bars, stored securely. Gold is the 5,000-year proven store of value. It will preserve purchasing power through the reset. Bitcoin, if you understand the technology and can hold it securely. Bitcoin is the digital gold. It's more volatile than gold, but the upside is larger. The U.S. government is about to revalue it to $1 million. Get in before they do. Real estate, property with productive use. Farmland, rental properties in strong markets, not vacation homes, not speculative flips. Productive real estate that generates income. Commodities, energy, agriculture, industrial metals, these will all rise with inflation. Exposure through commodity-focused funds or direct ownership if possible. Third, get out of debt. This sounds counterintuitive. If the dollar is being devalued, shouldn't debt be good? You repay with cheaper dollars. In theory, yes. In practice, no. Here's why. Your debt is denominated in dollars, but your income is also denominated in dollars. When the dollar devalues, your wages don't keep up with inflation. So even though you're repaying with cheaper dollars, you're earning fewer real dollars. The math doesn't work in your favor unless you're the government. For individuals, debt becomes a trap because you can't print money. You have to earn it, and earnings don't keep pace with inflation. Pay off high-interest debt. Credit cards, personal loans, car loans, get rid of it. Mortgage debt is more nuanced. If you have a fixed-rate mortgage at 3 or 4%, keep it. That debt will inflate away. But if you have an adjustable-rate mortgage or a high fixed rate, pay it off or refinance. Fourth, diversify internationally. Don't keep all your wealth in US dollar assets. Open accounts in foreign banks, Swiss francs, Singapore dollars, Norwegian krone, stable currencies from countries with low debt and strong fundamentals. Buy foreign real estate, property in countries that aren't destroying their currencies. Consider foreign stocks, companies that earn revenue in non-dollar currencies. The goal is to have wealth in multiple currencies and jurisdictions, so when the dollar collapses, you're not 100% exposed. Fifth, build skills and relationships. When currency collapses, what matters is what you can do, what you can produce, who you know. Your network. Skills that generate value regardless of currency. Trades, medical skills, agricultural knowledge, repair skills. Relationships with people who have resources, land, food, tools, knowledge. Community resilience matters more than cash when currencies fail. History shows that currency collapse creates social instability. Having skills and relationships is insurance. Now, let me address the objection. You're thinking this sounds like doomsday prepping, like tinfoil hat conspiracy. Let me show you why it's not. The U.S. debt to GDP ratio is 132%. This is a fact. The interest payment is $1.2 trillion annually. This is a fact. The government cannot pay this through taxes or spending cuts. This is mathematical reality. Devaluation is the only option. This is historical precedent. Every government in this situation has chosen devaluation. The U.S. did it in 1933. They will do it again. The only question is when and how. And I've shown you the how. The Bitcoin and gold revaluation. The timeline is visible. The pieces are moving. The executive orders are signed. The bills are introduced. The narrative is being set. This is not conspiracy. This is policy. Visible policy. You just have to look. And here's the final piece of evidence. The world's central banks are preparing. They're buying gold at record rates. In 2022 and 2023, central banks bought over 2,000 tons of gold, the most since 1950. Why? Because they see what's coming. They're diversifying out of dollars. They're preparing for the reset. China is accumulating Bitcoin through state-owned enterprises and mining operations. They're positioning. Russia is stockpiling gold and reducing dollar reserves. They're preparing. The BRICS nations are creating alternative payment systems. They're building the infrastructure for a post-dollar world. These are governments with intelligence agencies, with economic advisors, with inside information. And they're all preparing for the same thing: a dollar collapse and monetary reset. If they're preparing, why aren't you? Now, let me give you the exact steps. Week 1. Open a precious metals account. Buy physical gold. Start with 1 ounce minimum. Scale up based on your net worth. Target 10 to 20% of net worth in gold. Week 2. Open a Bitcoin account. Buy Bitcoin. Start with $1,000 minimum if possible. Scale it based on risk tolerance. Target 5 to 15% of net worth in Bitcoin. Week 3. Evaluate your bonds. Sell all long-term government bonds. Sell corporate bonds, unless they're very short duration. Move proceeds to hard assets or short-term instruments. Week 4. Evaluate your cash. Reduce cash holdings to 3 months' expenses. Move excess to hard assets. Keep only operational cash. Month 2. Diversify internationally. Open a foreign bank account. Research foreign real estate. Consider international stock exposure. Month 3. Build skills and community. Identify what skills you have that create value. Connect with local networks. Consider rural property or access to land. This is your action plan. Week by week, step by step. Don't wait. Don't delay. The window is closing. Let me show you one final thing. The moral dimension. Some of you are thinking this isn't fair. You're right, it's not fair. It's theft, legal theft. But it's happening whether it's fair or not. You can be morally outraged and financially destroyed, or you can be morally aware and financially positioned. I'd rather you survive and fight another day than lose everything standing on principle. The government doesn't care about your principles. They care about their survival, and they will sacrifice you to achieve it, without hesitation, without remorse. That's the reality of power. So your choice is simple. Adapt or get destroyed. Position yourself in hard assets. Preserve your wealth through the reset. Use that preserved wealth to build something better on the other side. Or hold dollars. Believe the government's narrative. Trust that they're looking out for you, and watch your life savings evaporate. I know which choice I'm making. I know which choice the smart money is making. The only question is which choice you'll make. Before we go, if this changed the way you see everything, don't watch this alone. Join the channel membership and get real-time tracking of the reset as it happens. Members-only updates, exclusive deep dive videos, and research packs where I walk through the signals, policy moves, price action, and what to watch next. This is where I post the timeline revisions first. If you want to preserve wealth through the reset, join us now and stay ahead. Links below. Not financial advice. Do your own research. Share this with everyone you know who has savings, who has retirement accounts, who trusts the dollar. They need to know the reset is coming. The US government is using Bitcoin and gold to erase $37 trillion in debt, and they're using your purchasing power to do it. Position yourself now while there's still time. The choice is yours.